Well, let me change gears here. We'll talk about reserve studies and taxes. How do those two intersect? So first question, why is there a difference between what's considered a reserve asset in a reserve study versus what a CPA classifies as an asset for tax purposes? Well, there are two different documents for two different purposes. The reserve study is a cash flow and budget management document to help you prepare for your expenses. The tax document is so you know how much money to pay the tax man. Very different documents. So IRS has its own set of guidelines. Now what's interesting is that there's two different tax forms that you can file as an association. Tax form 1120, which is very detailed, and tax form 1120H, which you can think of as the EZ version. And most associations file the 1120H, the 4H is for homeowners associations, the EZ version. And with that, there's nothing special, and there's no reason to have to separate out anything. So for most associations, the tax question of what is a reserve expense and not absolutely goes away. Isn't what you define as a reserve asset relative to taxes? For example, painting is not a reserve item, is it? Well, to the tax man, painting is not a reserve expense because it's not capital in nature. The IRS tax structure is built on capital assets, capital replacements. So when you're physically replacing something, physically replacing a roof, physically replacing a boiler, whereas, as you know, a paint project is a significant expense to an association. IRS doesn't consider that a capital asset because you haven't thrown anything away and put something new in. But for cash management, you need to do that, and that's what we do in a reserve study. So we have the 4-part test that guides what is included in a reserve study, and the CPAs or your tax planners have their set of guidelines for what they do in collecting the appropriate amount of taxes from your association. Two different documents, two different purposes.